Today we're diving into the latest action on MSAI MultiSensor AI Holdings Inc. The stock has caught the market's attention with a strong short-term uptrend, closing at 1.11 on October 29. This recent surge has brought a lot of excitement, but beneath the surface the technical indicators are sending mixed signals. In this video we'll break down the key trends, technicals, and what traders should watch for next. Let's start by setting the stage with a quick overview of the current momentum and the factors driving this rally. MSAI is currently in a powerful short-term uptrend. The Arun up indicator is at a perfect 100, and the Arun oscillator is also high at 92.86, both confirming strong upward momentum. The ADX sitting at 39.52 suggests the trend has moderate strength, while the directional movement index shows a clear upward bias. The plus DI is much higher than the minus DI, reinforcing the bullish tone. However, it's important to note that not all signals are pointing in the same direction, hinting at underlying contradictions. Despite the strong short-term momentum, some technicals suggest caution. The linear regression slope is slightly negative at minus 0.0009, and the stock is only at 22.53% of its 52-week high. This means that while the recent rally is impressive, it may be a countertrend move within a longer-term downtrend. The Commodity Channel Index (CCI) is at 231.56, which is in overbought territory, further highlighting the risk of a potential reversal. Price action has been accompanied by a dramatic spike in trading volume. MSAI is trading well below its volume-weighted average price, VWP, at 2.04 with a difference of nearly minus 46%. The money flow index is at 90.98, signaling overbought conditions, while the accumulation distribution line is deeply negative, suggesting some distribution despite the price increase. On the flip side, the positive ADOSC points to improving money flow, and the volume metrics show heightened activity. Volume ratio stands at 7.25, with a volume growth rate of 73.31 and a relative volume of 17.87, almost 18 times the average. Such a spike often hints at increased institutional activity. However, the mixed signals from distribution metrics raise questions about whether this interest is sustainable or if it's just a short-term phenomenon. Traders should be cautious about reading too much into a single day's volume without considering the broader context. Looking at moving averages, the picture is bullish. The current price of 1.11 is above all major simple and exponential moving averages. Short-term EMAs like the 5-day at 0.936 and 10-day at 0.844 are close to the current price, reflecting the recent surge. Longer-term averages such as the 200-day SMA at 0.901 and EMA at 1.03 are well below, confirming the strength of the short-term uptrend. This alignment suggests healthy trend progression for now. While the short-term trend is clearly bullish, the longer-term picture is less certain. The negative linear regression slope and the stock's position well below its 52-week high suggest that the recent rally could be a temporary bounce rather than the start of a new bull market. It's important for traders to keep both perspectives in mind when making decisions. Bollinger Bands show the prices hugging the upper band at 1.12, with a BB position of 98.29. This typically signals overbought conditions and suggests that the stock could be due for a pause or even a pullback. When prices ride the upper band, it often means momentum is strong, but it also raises the risk of a short-term reversal. Momentum indicators are positive. The MACD is at 0.077, with the MACD signal at 0.026 and the histogram at 0.051, all pointing to ongoing bullish momentum. The RSI values at 62.77 and 61.16 suggest the stock is in neutral to slightly overbought territory. Stochastic indicators are mixed, but overall the momentum remains strong for now. Volatility is another key theme. The ATR14 is at 0.198 and true volatility stands at 17.8, both indicating high volatility. This means traders should be prepared for sharp price swings in either direction. High volatility can create opportunities, but it also increases risk, so position sizing and risk management are crucial. Linear regression analysis shows a minimal negative slope and a very low R-squared value of 0.017. This means the model explains very little of the price variation, and the current price is significantly above the predicted value. Such a large deviation highlights just how exceptional the recent price action has been, reinforcing the idea that this could be a short-term outlier rather than a new trend. Looking ahead to the next trading day, technical indicators suggest an opening in the 1.1 to 1.15 range. The pivot point at 1.17 is a key level to watch. With the stock closing just below this pivot, there may be some upward pressure at the open. However, overbought conditions and high volume could also trigger profit-taking, leading to a volatile start. The pivot point at 1.17 acts as a crucial reference for traders. If the price opens above this level, it could signal further upside. If it fails to break through, we might see a pullback. The interplay between price and the pivot will likely set the tone for the day's trading action. Current price of 1.11 is just below the pivot point at 1.17, 0.188 above the first support at 0.922, and 0.25 below the first resistance at 1.36. These levels will be key battlegrounds for traders. If the stock breaks above resistance, the next leg higher could begin. On the downside, support at 0.922 could provide a floor if selling pressure increases. Given the recent volume spike, intraday movement is expected to be volatile. The stock may test the pivot point at 1.17 as initial resistance. If it breaks above, the next target is 1.36. On the downside, the first significant support is at 0.922. The 50-day SMA at 0.699 could also act as a secondary support if the price drops sharply. Using the ATR14 value of 0.198, we can estimate a potential trading range for the next day. The high could reach around 1.308, while the low might dip to 0.912. This wide range reflects the heightened volatility and suggests that traders should be prepared for significant price swings. In a bullish scenario, if MSAI breaks above the pivot point at 1.17, the uptrend could continue toward the resistance at 1.36 and possibly higher. The combination of strong short-term momentum and elevated volume could signal continued institutional accumulation, supporting further gains. On the flip side, overbought conditions and negative accumulation distribution values could trigger a pullback. If the stock fails to break above the pivot point, it may retreat toward the support at 0.922. A failure here could accelerate the downward move, especially if selling pressure intensifies. Neutral scenario is also possible. The stock could consolidate around current levels as the market digests the recent sharp move. This would allow traders to reassess and potentially form a base before the next directional move. Consolidation often precedes significant breakouts or breakdowns, so it's a phase worth watching closely. It's important to remember that MSAI is still far from its 52-week high of 3.33, currently sitting at just 22.53% of that level. This context helps frame the recent rally as a potential short-term bounce rather than a full reversal of the longer-term downtrend. The Commodity Channel Index (CCI) at 231.56 is deep in overbought territory. This indicator often signals that a stock is due for a correction or at least a pause. While momentum is strong, traders should be aware of the elevated risk of a short-term reversal. The Money Flow Index is at a high 90.98, reinforcing the overbought signal. Meanwhile, the negative accumulation distribution line suggests that, despite the price increase, some investors may be selling into strength. This divergence is a classic warning sign for traders to watch closely. To recap, the MACD remains positive, supporting the bullish case, while the RSI values above 60 suggest the stock is nearing overbought territory. These indicators together paint a picture of strong momentum but also highlight the need for caution as the rally matures. Volume growth rate of 73.31 and the relative volume of 17.87 are both exceptionally high. This level of activity often precedes major moves, but it can also signal exhaustion if buyers become scarce. Monitoring volume in the coming sessions will be key to gauging the sustainability of the trend. The 50-day simple moving average at 0.699 could serve as a key support level if the stock experiences a sharp pullback. This moving average often acts as a magnet for price action during periods of high volatility, providing a potential floor for buyers to step in. Based on the ATR, the estimated trading range for the next session is between 0.912 and 1.308. This wide range underscores the heightened volatility and the need for careful risk management. Traders should be prepared for both upward surges and sharp pullbacks within this band. The elevated volume and positive ADOSC suggest that institutional players may be accumulating shares. However, the negative accumulation distribution line tempers this optimism. It's possible that while some institutions are buying, others are taking profits, leading to a tug-of-war in the price action. The key takeaway is the contrast between short-term bullish momentum and the longer-term bearish trend. While the current rally is impressive, the negative linear regression slope and the stock's position relative to its 52-week high suggest caution. This could be a classic short-term bounce within a broader downtrend. Recap: the most important levels to watch are the pivot point at 1.17, resistance at 1.36, and support at 0.922. The ATR-based range of 0.912 to 1.308 provides a framework for expected volatility. Keeping an eye on these levels will help traders navigate the next moves. Summary: MSAI MultiSensor AI Holdings Inc. is experiencing a significant short-term rally, but the technical picture is mixed. Elevated volume and price movement indicate something important is happening, but the underlying signals suggest this may be a short-term bounce rather than a new bull trend. Traders should exercise caution, watch key levels, and be prepared for volatility as the market decides its next direction.